Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And please note there will be no stream on Friday due to the exchange holiday, and I will not be available on Monday, so I will not be streaming until next week on Tuesday. Now, this stream is about integrating bookmap order flow tools with auction market theory, in other words, participant behavior, the interaction of buyers and sellers, which is the purpose of the market, and using a tool called the volume profile, which is volume and price, because price in a vacuum doesn't give you everything. Volume is the component that differentiates one price from the other. And we can see that using a tool called the volume profile and also reading into structure. Price action, behaviors, and structured trades are what this stream is about. And also getting into fractal trading, which is basically a top-down, bottom-up approach. Top-down, intermediate time frame, down in fractal into shorter time frames for potential interaction with the market when you can get in alignment with the vetted trade plan. And this is all done, as I say, in fractals, top down, and think about it like a Russian doll, where it's all the same, but they're inside of each other. And once you understand market mechanics and behavior, potentially you'll be able to narrate the participant behavior and at times get aligned with it. And then the Trader Lab is about helping you understand these mechanics, the processes involved in translating market behavior, and also helping by providing some structured trades that you can then potentially reverse engineer and extract metrics to help you see if you actually can develop an edge, which is the foundation of the business of trading. General disclosure: all bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. And please grab a pen and a piece of paper, like I do every day, is I take a top-down, bottom-up approach, which means lay of the land. What is the context? In the higher time frame, what are the metrics that might give some support as far as the potential locations that the market may go to at some point or not, and then the structured trades, which we will actually represent here in review, I should say, in the stream, uh, and how you might get an understanding of alignment. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only, and it follows the Bookmap Discord Trader Lab chat structured trades that are available to all of you, as well as a library of webinars that are also available for your review to see these processes narrated in real time as they have developed. And the shorter term streams that I do every day, I review what has happened as the day unfolds, because the open is key to see who takes early control. And in the Trader Lab, we have structured trades to attempt to get in alignment if that's part of your plan. And I always suggest that there's different contexts or configurations, and you should, or at least might, consider having a different plan when you detect different changes in the participant behavior. The market goes from directional to rotational, and if you can identify these contextual shifts in the fractal or time frame that you operate in, you might at times be able to get better aligned with those configurations and use structured trades to potentially participate. And that's all about you extracting metrics so you know when these configurations shift, do you actually have a structured trade and a statistical edge to participate? That is the business of trading. Now, grab your pen and paper. I'm going to give you some statistics, and then we'll get into the party. And by the way, if you're in the Bookmap Discord Trader Lab chat, this stream, all these daily streams are available for review, and that's exclusive for the Trader Lab participants. And you don't have to be a Bookmap subscriber. You won't be solicited if you want to take advantage of the education and the community of traders that are looking to leverage a collective experience into something that might be more. The other part of this is this stream will be available until Tuesday, I suspect. So if you want to review this over the weekend, it is available. So grab your pen and paper. Here's a couple of statistics. Write these down. And these, I always say about statistics, you know what a statistic is? It's maybe. The other part of a statistic is there's no 100% statistic. The other part of a statistic is, at least this is how the market relates to the previous RTH, where we opened relative to yesterday's RTH, which is 8:30 Central Time to when the market closes, and the RTH before the ETH opens. So it does not take into consideration the behaviors that have taken place in the higher time frame. It is strictly in a relationship. So the thing about it is, when you see a statistic, it is not something that you follow blindly. It's something that you put within the context. So sometimes you're going to have a lower statistic, but within the context, it's actually going to be more meaningful, and you're going to have to mentally adjust to what you know. Now, let's write something down, and then we'll get into the stats. The market goes up to go down, the market goes down to go up. And we spoke about it yesterday, I think, in the stream. And I can't remember because I don't remember even my last trade. But basically, if the market sold down, right, and we know we had a trend configuration last Friday, and that was poorly structured. So that sets up the potential for us to go down and fix it. That's what we've done the last couple of days and blow out those longs, right? So we are still within the range at the moment of that Friday trend configuration day. So what have we done? So we got longs being flushed out. And remember, longs have sell stops under the market. Longs become sellers, and then new shorts enter the market. So now what are we doing? We've gone down. We got early selling. If we run out of sellers, then what do we get? The shorts in the market become the buyers. So write this down. The market goes up to go down and goes down to go up. And that's what creates our rotations. Even if the overall trend, let's just say, might be down. That's why we had the squeeze in the trend day up. Buyers, relief rally off the banks, like we're going to rescue everyone. The Fed, you don't fight the Fed. So the squeeze, run out of those buyers, then you get the sellers, then you get the long liquidation. I hope that makes sense. You need, in my opinion, to always be thinking from both sides of the trade, not to get myopic. And that's part of what the auction process is, participant behavior. And also write this down. Think like a retail trader. Don't act like one. Always think about who's on the other side of your trade. And this happens in all time frames or fractals. So if you're even trading a little rotation like this, there's buyers and sellers on both sides of these little legs. It's all the same. That's the fractal. Now, let's go take a look again at the stats and we'll move on. The overnight volume point of control. Now we're opening lower in range. Okay, so inside yesterday's range and we open lower. So 83% probability we get to the overnight volume point of control. Overnight volume point of control, which is this right here, just so you know. So we're going to open right on top of it. There's the open. RTH opened this morning, and there's the overnight volume point of control. But I want you to know 83%. The overnight mid, which is above us, and we'll see it later, 83% probability. Previous mid, 72%. Previous point of control, 70%, which is above us, around 41, 16, 17, I think it was. Make a note of that. The initial balance high, 69% ish probability. Overnight low, 66. Previous low, 53, and it's going down. Previous high, 40%, and they go down. But that is not context sensitive. So we know we have those stats. So now let's take a look at structured trades. By the way, if you're in the Bookmap Discord Trader Lab chat, please post your questions. If you're in YouTube, there's about a 10-second delay. Thanks for visiting. Um, this stream, if you're just joining us, is about the structured trades that we have available for everyone in the Bookmap Discord Trader Lab chat. And that's how we go, and that's how we roll, and that's how this stream is about. So I'm going to go over, now you have the stats. So I go over the open, the first trade. These are structured trades. They're not recommendations. You have to vet them. I always suggest the open is a separate trade plan because of its speed. This is nothing different than practice, 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 practice. What you're going to see in this stream that's different, there's no indicators. What this stream is actually is reading participant behavior. In other words, the language of the market, and then learning to translate in a very rapid process. It's no different than playing music, translating a foreign language, dancing. You know, dancing with the stars. Well, this is dancing with the market. So let's look. So, what do we anticipate? First of all, if the market was sellers somewhat yesterday, and you notice we had a buying wick, so the buyers were getting interested yesterday's RTH. So then we can anticipate if we get selling this morning at some point, we might get short covering. There's one other number I have to give you, by the way. 4117, I think, is the number. I got to look here, guys. Now, I want you to write that down. That's called the micro. Let me just show you where some of these levels are, and then we can get going right away here. Overnight mid, right? That's a statistic. And we have above us, I'm sorry about this. I'm going to have to get myself a new mouse, I think. Let me do it this way. This is our target. Naked volume point of control. And 40, it looks like we hit it. Look at that. And then this 4117 quarter. This is called a microcomposite volume point of control. What it is the next higher time frame of this. So what you have is an intermediate time frame. If you put all the days together, including the trend day up last Friday, and you overlay a volume profile on it, the highest volume that has taken place is at 4117. That is retail in the intermediate time frame. This was yesterday's high volume. Retail, yesterday's RTH. And here's what you're going to see, and this is what trading in fractals is about. Yesterday's daily time frame, retail. The intermediate time frame right above here, retail, microcomposite VPOC. So this is VPOC yesterday, and all it is volume point of control, retail. And this is the intermediate time frame, retail. Notice the alignment. By the way, I see it's the high of the day. Notice the alignment. Huh, how about that? Is it a coincidence? Or is there something to this? Huh, what do you think? Huh. So this is what volume is about, guys. The reason this is and why I do what I do, and I'm not saying it's the only way to do anything or to even the right way, is because the market, what is the purpose of the market? The fundamental purpose of the market is figure out what's too high, what's too low, what's fair, what's unfair. And the market participants will move the market around trying to figure this out. In other words, they participate, and it happens at all time frames. So let's go to the first structured trade in the Trader Lab. And if you have questions, again, drop them in there. So anyway, we'll talk about the trades. Here we go. This is the first structured Trader Lab trade. Now, we don't know which way it's going to go, right? By the way, overnight volume point of control. And I would say that's not a big reach, to get here. That's not the primary issue. Here's what it's telling you, by the way. If in the ETH, this is the fair price. Now, fair price is retail. Think about, and I give this explanation because we always have new visitors, and I appreciate you visiting a Trader Lab. It's retail. If you go to the store, can of tuna, buck, right? And if we open, this is the ETH, the highest volume. This is where all the participants ultimately, after running around, there's the overnight low, by the way, in the ETH, figured out this is retail. If we open pretty much at retail, that saying is two-sided possibility. But here's what we know. We're close to the overnight low. The overnight low is an important statistic, and it's around 60% in this configuration. And the previous value area low is 71% here in this configuration. So if this is a fair price, the potential is to come out and check and then go up because it's balanced. In other words, a fair price. But we don't know in trading, and or it could go up and check the other side first because we're opening at a fair price. So it creates the possibility for two-sided trade. So we know that on the open. We also have our statistics and our targets. So let's look. So the market opens. This yellow line is called the developing volume point of control. All this is measuring volume and price. So the market opens, it resets to zero here, 8:30 Central Time. This is the session volume profile. All this is going to show us is volume. So you see this chop here, that's volume, right? And there's more chop over here than here, which says there's more volume. So as we start auctioning or trading, we are seeing the volume start to fill in at different areas. And think about that volume the same way you think about volume at a volume point of control. If a volume point of control is the highest volume in the developing daily time frame, and we were going to, that's where retail is, right in here. In other words, if this is the whole developing day and you see the volume in it, this is the same fractal in a shorter time frame. Right here, too high volume. So we're watching this to see which side is going to take the ball. Now let's come back to this is fractal. Now the developing daily time frame is saying too low. The volume is moving with price, so it's supporting the higher move at the moment. Volume is moving. So let's watch what happens. Now we have structured trades in the Bookmap Discord Trader Lab chat. Here it is. This is a short. Let's look at it. So too high, your volume point of control shifts higher. Retail, okay? Retail. So if this now is the fair price, but we leave it, this is the first Trader Lab short, and then pull back. So this now is a short, and here's what this says. Let's speak language of market. Too low, too low, and if we blast here after this shifts, too low, we do the opposite. See the change in behavior. Break below. I'm going into microstructure because this is language, it's speaking. So this says too high. Now, right here, it breaks, and here's what this says if you speak the language of the market. Too high. Microstructure, high volume. This volume in here and this are too high. When you break away, if this was too low, it is now saying too high. When you break below, this is a structured trade in the Trader Lab, and you pull back here and you can't regain this, it's a short. Now, is everybody tracking? Can you see how it starts filling out and how you might participate if you have a plan for it? How about in YouTube? So let's look. This is now too high. And notice what happens. The volume point of control shifts down, which suggests lower. This is a target. So overnight low, value area low. Let's go back to our stats, okay? Overnight low was 66%. Thanks for playing. Value area low, got to find it here. 71% target. See how the stats might help you? So now let's keep going. And yesterday's low, 53%. And again, who knows? So let's watch. So this is the first Trader Lab structured trade. Where'd we go? Here, watch. Too high, shift down. Watch. Break low, pull back. Watch. Continuation short. So, do you see something generic? If the short happened off the migration of the volume point of control, which was our initial short, we migrate down. Yesterday's low is a statistic. You guys with me? 53% probability to get those longs out from yesterday. And it looks certainly like we were going to go north, right? But what did we do? Watch. Now, by the way, so potential short, you'd be scaled. This is the mid in the VWAP. Potential short, back to here. If not, no problem. So if you took this, you'd have be risk neutral if you're following a Trader Lab minimum two lot configuration, going for this. And if you scratched, no trade management, you just put it on. Your trade fails above here. This is the next location for a trade. Back to here. If you can execute, this is your microstructure location. Let me show you another thing. I'm going to show you how you might use this stop an iceberg detector. Uh, what this does is, so you know, the MBO data stop iceberg MBO package, it reads the tags on the orders from the CME. This gives you terrific insight on what might underline be happening. Here's what it is. Stops, stops, higher, less stops. It's the only thing I use anymore from indicator world. Notice what's happening. If the price is going higher with less buyers, and we're assuming, well, we know there's buy stops in the market, but if the market's going up and we're seeing less of buy stops, you have to ask yourself, who's the buyer? Is the buyer somebody who wants to be long, or is it more of a passive buyer with buy stops that become market orders because you're seeing that in the delta? I mean, that's the question, right? And here's the other thing. 72 icebergs are selling here. And it's not in the middle of nowhere. It's actually right at the mid. So we got the VWAP, we got the mid, and here's microstructure. Too high, too now. If you can't execute this, no problem. You know, it's not your trade. Okay. I mean, you might be getting short here. And here's the reason why I'd still be short is because of statistic. Otherwise, if there was nothing sitting here that gave me what I perceived to be a potential edge, then I'd be sitting here working on my crochet. So right here, we fall below this. So too low, back to retail, outside, back to retail. When you take this out, it is now too low. Same process. Break, come back, and check. And you're going for this. Now, if you couldn't get on this, then you didn't have a trade, and your target is this. Yesterday's low, so ahead of it. And then watch where we come back. Notice where this is. Notice where we come back. High volume. So let's narrate this. And you need to incorporate these if you're interested in it. It's how do you remember translating the message, the language of the market, which is what this stream is about. Can we read it? Okay, retail. Break here. Here's the volume. Break back above. This is now too low. Okay. Now, that in of itself, if we have a statistic, you need to prioritize how do you operate in the market, right? I use statistics, and I'm not saying it's right. In fact, I couldn't even tell you if it's right. But if I'm what I need, maybe it's more psychological, but it's also because I want an edge. I'm going to use everything but the kitchen sink to try to differentiate what I do from other retail traders who don't think like this. Most retail traders think the indicator is going to do the work. Maybe. I find, though, that that doesn't work for me. So this is the short. This is the obstacle. Once you break, this now is too high. There's your test back. That's a potential short also, or not, you see. And then you're going for this. And then after this, there's really no statistic, down here. Because what's under yesterday's low? Stops, right? So look at the icebergs accumulating in here as we come in, as these stops come out. These are the longs under yesterday's low, 358 stops. Thanks for playing. We really appreciate it. So now look at this. This is the volume point of control. This is retail. So I'm looking at this. I see this volume. I took a long here, by the way. Just saying I did. Okay, scale, figured stops, and come back to here. Okay. And you can see I got a scale and then scratched. That's the real world. What are you going to do? Right. And the reason I was looking for the long is we took out the stops. If there's no more selling, now I don't know where the low is. It's not my favorite thing. You guys know that. We took this out. I see the buying. We pull back to the volume. And again, it's the same trade if it's in your plan. If it's not in your plan, you just hang out. Same outcome. It's like, come on. So, you start talking to the market. Anybody ever do that? And then, we get on our longs. Any questions so far? So let's go take a look. So now everything changes. So now we have this. Now at 9:30, we have the IB. And which is and we have the IB high, but so either the IB high or IB low, one of them getting taken out is 90, almost 98% probability. The IB high getting taken out is almost a 70% probability. And the overnight mid, which is above us, 83%. And yesterday's point of control, 70%, which is our targets for the longs. So now what you got to be thinking about is, how do I get long? So let's go take a look. This, well, okay, I'm not going to, these are not structured. I want to stay with the Trader Lab structured trades. So let's look. Okay, so we come up. This is a selling structure. Now, nobody knows, so, but for me, I don't have any shorts in this configuration. I'm just looking for my stats. Now, let's look at some behavior. The volume has shifted from down below to up here. This is the volume, developing volume point of control. This is now retail, which suggests everything below us is too low. So let's watch. Now we have a setup in the Trader Lab, or structured trade, called the VWAP to VPOC. Okay. Now, let me explain how this one works. Now, so you guys understand, and I always want to remind everybody. Now, this was our previous location. This is now too low. I should be marking these for you guys. And I mark them. I call them a variable high volume node. And what the reason I mark them is because I don't, when everything scrolls off the screen, I don't want to forget, because this is saying too low. So when we were down in this area, this is where most of the volume was. So this is your retail, and we tend to rotate around it. If the volume shifts here, which is where it is now, volume point of control, that is saying too low. So this is my outside. Now we have a structured trade in the Trader Lab. Let me show it to you, maybe. It's called VWAP to VPOC, okay? It is a potential long. Let me show you the trade, maybe. Here you go. Okay, so the trade sets up here. Here, watch. Now we're looking for a trigger. So here's where we have volume, volume, and watch. Break low. So that becomes a short, except it's not a short because we're looking for a long for mean reversion. I was looking at this and I'm going, okay, you know, we got the IB stat above us. If we can come out here, take some stops, and then come back in, that would be a long. That was my plan. That's a structured trade in the Trader Lab. But here's the other piece of this. We're coming outside. This becomes potentially mean reversion. So the fact we didn't get a trigger here suggests lower. And I was looking to get long. So I'm just telling you it's a structured trade. Didn't happen. Then I'm going, what's going on? I don't know. And I'm in the state of confusion. If you think you're the only one, no. Because I'm now looking here. We're going to test this. This would be my next location to potentially try to get a price check. I call this a price check in aisle 3 to come back and check. Is this really too low? Notice where it is, 4,100 also. Isn't that interesting? And then to come back to here for the stops and then back to the volume point of control up above. So that was the plan. See? So what this is it came down. It did not get to this level. Right in here, I'm looking at this, and I have to tell you, I'm looking at it and I'm going, what now? You know, and I see the buying. This is your pullback. Now, if this is not a structured trade for you, and this is what gives it away, this right here, and this is very hard to read, and it, you know, all I'm saying is if it's not your thing, then it's not your trade. If you're using structured trades, this would be the area to check. Didn't get there. I mean, it's only a point away, but here's what I saw. I see this, and I'm looking for this. I see the iceberg. I see absorption. Let's look a little further. So a little iceberg, some iceberg. I'm looking at this. I'm preferring that. There's my micro high volume. And here's my break high. So now this is an over under. I am anticipating these guys with their stops here get taken out and then we're going to come back because I my stats are now above me. If it's not your trade, you just don't bother. And that's what we talk about in the Trader Lab. So let's watch it. Remember, so we come back here. This is called mean reversion. And the joke is, yeah, it's mean. This is your support, 4101.75, because it was too low in the microstructure. Break high is your trigger. The volume is your support. So volume, break high. So this volume is your support. This is your obstacle. This is your fuel. These are structured trades. Again, if you require this, then it's not your trade. So let's watch the behavior. Here's your volume. This is your structure. This is like a VPOC, except it's in fractal. Is this logical? I don't remember what happened here. Let's watch. Do you see symmetry and a fractal? By the way, I posted in the Bookmap Discord Trader Lab chat, and everybody can access this, a webinar on trading in fractals with microstructure, specifically this. So you can see how you look inside. Is everybody following? you guys with me? By the way, if you're in YouTube and you're finding this interesting, how about a thumb up? Just so you don't forget. Thumbs are nice. We like thumbs. Thanks, Peter. So we come back. So here you go. This is a potential long. Now, there's two ways to trade these things, you guys know. You see it, you're near a location. Remember, horseshoes and hand grenades. If you're a developing trader, it's more important not to take this trade because you're really working on discipline and not being attached to dollars. Be attached to your trade plan because that's ultimately what's going to make you or break you, in my opinion, as a trader. Is not taking the trades that don't fit is much more important than dancing, in the dark, as they say. But this is a viable trigger. So you're seeing this this little node that says high volume is the same as this, except that's in the fractal. Is everybody following me? I mean, if this isn't clear, this is really important that you ask. And it's really, really key. This is the basis of understanding fractals, microstructure, and a generic process, thinking of those Russian dolls, top down, bottom up. This is the bottom up. This is that little Russian doll. Anybody have a question? I'll give you a couple seconds if you're in YouTube because I know there's a delay. Thanks, guys. How about in YouTube? Because of that 10-second delay in YouTube, those guys can run and get a cup of coffee, not miss anything. Okay, no questions. So this is a potential long, and here's another way to play this. The test. So let's say you're sitting here and you're going, I want to get long here. All right. And this isn't your thing, right? Let's just say. Now, if it is your thing, you'd be long and you'd be scaled. But now we bounce off of here and we come back. Now, of course, it can keep going. You know, we haven't figured that part out. But this is where it was too low based on this fractal, where that high volume is. The potential is to come back and check, is this too low? Is this volume too low? This is our test. So this is a potential long, and then you got to scale, and whatever happens, happens. Are you guys with me? So you had two opportunities there. At least the one based on Trader Lab, the one back to the high volume is a legitimate structure. The one that was on the run was a little bit more like, uh, a little more advanced, I would say. So anyway, long, back to the stops, back to here, and then hold. And we're back to our stats. This and this. These are our targets, I believe. Yes, those are our primary targets. Now, whatever happens, as you know, happens. So let's watch. Okay. So these are our primary targets 17. Oh, looks like we're in the bonus round. 4130 is the next higher volume. In other words, let's look at how this works. This was retail yesterday. The right above it is the micro composite volume point of control, which is the intermediate time frame. Come on, Lewis, let's do this. So this is retail in the intermediate time frame, and this is yesterday's retail. These are our primary targets to come back and check. Value area high. Let me just give you the stat on that one. And for me, the trade could be done. I just, you lay your runners out, you put your helmet on, and whatever. If you trade with targets, you would be done with the long. Okay. Now the value area high is about 60% that we would get here. Now, after this, I have no stats, but I have behavior. So let's look at the behavior. Now, if we're thinking auction, which is kind of the way my brain operates, this was too high last time we were up here. We left it behind. The market's nature in all fractals and time frames, and you've observed this, even if it's that little micro fractal for the long, it's about the volume. So this was retail yesterday. This is retail from the last time we were here, which I think was either the day before. Let me just look. Yeah, I believe. Yes, day before, which is where the high volume is. So we have the potential to come back and check this or not. But this is okay. Look, yesterday's high. What am I thinking? Hold on one second. Yesterday's high, let me just find a statistic for that somewhere. We got yesterday's low already. Can't find it. Previous high, 40%. So this was a lower probability, but remember, what did I say at the top of the stream? The market goes up to go down and goes down to go up. We went down. Now we're going up. So what's the potential? Well, here, because it's key level, which was our primary target, and if we extend, then, yesterday's high has buy stops above it. Logical? And then this. So these are our targets on the upside, not a recommendation. This is auction market theory. This is market mechanics. This is navigating and translating the language of the market, operating in a random environment. Trading, at least from what, my understanding is, uh, one second, please. Got to put you on hold 1 second. Any questions, post them. I just have to check something. Post your questions. I need 30 seconds. All right, I'm back. Sorry about that, guys. Okay. Um, Yesterday's high is not the IB high. So I think, JC, uh, you might want to confirm your levels. So these are our next targets, okay? And now let's talk a little bit about trade management because you might find that interesting. Now, for me, I can put the car in the garage at 17. In fact, let me make sure I've canceled everything here. Yeah. Um, you know, I get orders and I forget I have them on. Brilliant. That's why trading with the plan, is kind of like you do your thing. And if you have a trade plan, you can actually be confident in the sense of how you manage a trade because it's all been sorted out before you get in the market. Uh, the Trader Lab is really about organizing market mechanics and context and attempting, and I'm using that quite, clearly to get in alignment. The issue with the market is really the rotations are random and the interaction with participants is random. You get Bullard commenting, you get external things that impact the behavior of the participants on a short term basis. It can throw you out of your trades. That's every day in the market. Um, you notice we've had someone participating lately in the indices that I call it the mad bomber that just drops a bomb on the market and disrupts the auction. That has cost me because it just blows through levels, and that's just the random nature of the market. We don't like it. I've never liked it, but you can't. You just accept it because you're really playing a statistical game. In the end, the business of trading is really built on the stats. It's not built on anything more than you're trying to get in alignment with it, and then everything is random. So this is our next target based on the auction. And the market never has to get there. The market could care less about anything, levels, So I'm just saying. But once you break through this level, it is logical. If we think about, remember how the VPOC was migrating and saying what was below was too low, and we use that? These are the same levels left behind. So this was too high, which is why we auction lower. If we take it out, it's no different than moving away to the next potential level. That's really what this is. And remember, the market, market's random. This might be the high of the day. I don't know. But let's use our common sense. What's at yesterday's high? What do you think's above yesterday's high? Stops. That's right, guys. Stops. So yesterday's high is vulnerable. Now, there's some other behavior you can anticipate ahead of a previous high, and that's profit taking. Now, if we don't take, I would be beyond shocked, and shocked, I get shocked all the time in trading, but I'm saying is that we don't get into these stops and potentially get here. Now, that it doesn't have to, it's not my job. My job is to play statistics, follow a trade plan, manage my trade, and whatever happens, happens. I'm no longer attached, other than I kind of, what is it, cheer for the team. But other than cheering for the team, I have nothing else to do here. I just follow my plan. And then for me, I have no more trade to put on until I'm done with the stream. And then it's, does the market offer me an opportunity? If this is not taken out for some reason, and I see buying, and it's not a recommendation, within my plan parameters, and this would be an area to observe, just saying, and so would this down here. If we come outside, now right here, I want you to see what you got here. This is interesting. I want to show you a little something to look at. This is a consolidation, right? This rotational trade. And what you're seeing in the volume is this. You notice it's directional, and this creates low volume. In other words, it didn't consolidate. When it runs, it leaves this low volume area. This becomes an outside edge of a consolidation. Outside edges have stops. So what can often happen, and that's created because of this. So the stops are sitting here. Now the market does not have to come out, but often what I observe is, if everybody, not everybody, but let's just say retail trader behavior, where do we put their stops? They put them here. So we know there's stops. Now, the market doesn't have to get down there. But what I like to see, and again, it's not a recommendation, you have to vet these. This is now potentially, if it's a rotational trade, in other words, it's changed from direction, this is called context, to rotation. You would have a separate plan inside a plan. So you'd be going potentially for this and this. How do you participate? Well, the market has changed. So let's just say in the developing daily context, it's up, right? In this shorter time frame context, it's now rotational. So you're trading potentially mean reversion, which is outside in. So it would be potentially, and again, it could fall out of, it could do anything. If we come out here, take the stops, and it can go wherever it goes, and we see the buying, this becomes your target ahead of it, because that's retracement. And here's your stops coming out. Thanks for playing. Back to here, and then potentially here. So that would be the potential. So let's see if we get it. Not a recommendation. You need to have a vetted trade plan. These are not trades. I'm not calling trades because I'm, in the vacuum as much as anybody. And if I put, now remember, what were we looking for? That stops, because that's retail trader behavior. Remember, you wrote that down. Think like a retail trader, don't act like one. This is a potential buying structure, not a recommendation. Where's our obstacle? It's right there, that high volume. This is mean reversion back potentially to here. So let's observe it. Remember, I don't call trades. I'm a tourist. So now anything can happen, right? Anybody here not take stops? I'm still working on that. I still take them because I protect my account. I just look at, losses in the market as overhead. I don't look at it as a personal, like, gee, I didn't know. No, I don't know. So my job's not to know. I can't know. So this needs to clear this. This is microstructure here. It's like tissue paper, but it's where the volume came in and we saw the buyer, right? This is your target ahead of this for scale. So you're using, the tweezer in here, but it's subject to you. Now, the way I think of these, if I get in and I know I need to scale, I have to be able to cover my risk and mitigate it and run a minimum 2 lot. I'm only going up to here. So I wouldn't personally put on more than 2. Again, scaling ahead underline of the high volume. What you're seeing in microstructure, come on, is, because we know what that's doing, right? So you know what's going on there. Let me just show you if I can find it. Is this. This behavior from out here back to here, this is a high volume node in the developing time frame, is the same. Same. That's why fractals as, come on, I'm trying to moving the screen around, but I think you get the point, right? This is trading in fractals using microstructure. This is your long. This you scale here, head of here, and then helmet. Are you guys tracking? Can you see it? So it makes sense. Is it logical? This is auction market theory. In other words, participant behavior, which is ultimately what the market's about. The market is not an indicator based business, it is a participant based business. This is retail in here. So if you're trading, hopefully, in alignment with we perceive to be an upside move, even though we've hit our primary targets, we have one more, 2 more. We have yesterday's high, and we know there's buy stops there. So to me, this is a smart trade. And all we've done is this is called mean reversion. And remember, the Trader Lab is built on participant behavior and understanding why the market's doing this. Why is the market doing this? If this is retail, the high volume there, in other words, retail, if the participants perceive in this structure that this is the fair price, what do shoppers tend to do? Oh, the tuna's at $1 here. Okay, I'm willing to pay that. But hey, it's 75 cents out here. And oh, the sell stops were here. Do I want to join the retail traders who do the same behavior like lemmings? They all do the same thing. Think like a retail trader. Haven't we all done this? Well, if we've all done it and we all usually get taken out. Why? If there's sellers here, and it's always, we used to think, oh, they went for my stop. No, they didn't. Your stop is with everybody else's. And if there's sellers and the market runs out of buyers at the time and we rotate and all the sell stops are sitting under this structure, which is where retail traders pile their stops, what do you think? Do you think it would make sense to get these guys taken out and then see if we exhaust here and then see the microstructure for a return here? What's the better plan? This is where studying the market and anticipating the behavior is really, in my opinion, what at least a pretty important part of trading. And if you, here's the other part, suppose you need that indicator, whatever. I always think of it like the blanket they give you or the little bunny or the teddy bear, but it gives security, right? Because we're looking for certainty. It's an emotional and a psychological need. We're wired that way, right? Well, I look at it a little differently. I don't use the indicators because it create a conflict. But let's say you need, want, like an indicator. How might you use it? Well, if you understand retail trader behavior, you would know, potentially underline that there's stops here. Okay. You would know if we get under there and we exhaust that it was just a stop pick. And why did we suspect it? Outside edge, right? And where was our trade plan? Our trade plan is for mean reversion, which is a generic process, outside edge, right? And you know what created it? This. I'm giving you everything I think that you need to know. And then, of course, the rest we don't know. What we know is stops, poorly auctioned, consolidation, what's on the outside edges, stops, stops out outside edge. Then where? Back to retail, mean reversion. We can't get above here, we're on the hook. If we get above here, and this is the play, here. That's it, nothing more. That's how complicated trading can be, other than random. I hope, and I'm not simplifying what our obstacles are to being career traders. What I am saying is if you build out a plan and your job is to just wait for your trade. And yes, it takes time. You need to be deliberate. You need to build out goals for yourself. What do you want to do? How about a friendly suggestion? You come to the Trader Lab and just pick out a structured trade that you like. And there's like it's like going to cafeteria or one of those buffets. Pick out one, anyone, and say, "I like this. I can relate to it, whatever it is," and then reverse engineer it. Set up a trade plan for specific configurations. For example, this is rotational. It's different than the bullet train. The other part of the bullet train is you anticipate where the stops are because that's what we're trading into. Whoever's on the other side, and why are we anticipating this? Buy stops, right? Here's a question for you. If you were short right now, what would you be doing? Where's our IB high, by the way? Let me get back to it. Way down there. Okay. Anyway, this is our trade. You guys here, this is a real time. Remember, I don't call trades, but I think you get the idea, right? Everybody get the idea? Is this logical, guys? And is this difficult? Or is it That's our next target. And you notice what's coming into the book, 345 contracts. This is the heat map. It shows you, so I don't have to be watching all these numbers clicking away. Uh, I want it my target, and I'll tell you what I do, not a recommendation. You always have to vet these ideas. Uh, I leave some for the sweeper. So I don't care about 41.30. I care about 29 quarter ish, whatever. Notice the liquidity front running yesterday's high. And that means icebergs might go off right here. Why do they execute? They want to take the other side of the retail traders. Notice the stops coming out, 300. Oh, there's your iceberg starting to execute. So this is potentially iceberg and iceberg. So we'll see what we do. Now, yesterday's high, we didn't take it out yet, did we? So let's observe. You guys know the trade, and you guys are following. I hope you see some value in what we do in the Trader Lab, and that if this is something that is logical. See, to me, trading, um, I when I started trading was in 1980. We didn't have the technology. There's a lot we didn't have. Um, so it was a different world. And when I started trading, we didn't even have computers. How do you like that? We had dumb terminals, and they were dumb, you know. And so ADP actually had it. That we called it was called Comtrend, and that was the first. And then when CQG came out with their first platform, it was the TQ 2020. I had that. So, you know, and this is all early on, you know. So there was a lot going on, when oscillators just were coming out. I shared the office with George Lane, who created stochastics. So believe me, I was pretty excited. I really thought now we knew what to do. The line would cross over and it would get long or get short, and then divergence was a big deal, right? RSIs and all this kind of stuff. And basically, all these oscillators are moving average based anyway. So, but anyway, that's kind of where I started. And then system design, because I was a swing trader. There was no real day trading. Really didn't happen. I mean, yeah, we would day trade, at times, big volatile markets. And early on for me, it was grains, and then spreads. Grain spreads were pretty exciting. So this is our target, right? So this trade would be done. What do you think, guys? Was it worth it? What do you think? Does this make sense, guys? Are you with me? Tragic. We're in the RTH session. We're trading against yesterday's RTH because that's where most traders, uh, you know, reference and the statistics we gathered. And, you know, and by the way, I want to thank Rod. He contributes a lot to the Bookmap Discord Trader Lab chat. He helps with the statistical research, but there are software products. You guys and you need to vet everything for yourself. When anything I quote here or even suggest, strictly for educational purposes, you always have to come up and do your own thing. The more confidence you can have, and the idea of a trade plan is to give you the courage to actually put the trade on, because you've done the work to extract the metrics. If you're making it up as you go, like every rotation you see, you're doing something, that's not trading, that's gambling. So what we're trying to do in the Trader Lab is differentiate our behavior from typical retail traders, who are gamblers primarily because they don't operate with an edge. And one of the challenges, I'm going to say, um, to trading is not knowing that you have an edge and where it is, and to not trade when you don't have an edge. Because your job as a trader is not to be trying to slam an indicator on a rotation and call it. That's not trading, in my opinion. Trading, and I'm not saying you can't use indicators, but the basis of trading is participant behavior. Remember, what's the purpose of the market? These participants are trying to figure out what a S&P is worth. You also happen to know that the exchange is closed tomorrow, basically, and we have NFP. If you were sitting short, let's get logical. If you were sitting short and we know the market goes up to go down and goes down to go up, what would you be doing? Would you be covering? Yeah, Peter, spread trading, there are no real stops. What I did when I traded spreads, I don't want to go into because I had some bad experiences with them also. I used to trade currency spreads, and we didn't have pairs back then. It was outright. So you'd buy, you get on the exchange, and buy a yen, sell a D mark, whatever you're doing. So I traded spreads for years. And if something nasty came out, there was no risk management on it. You'd wake up, you'd be 100 points on the wrong side, which, I think was 1,200, whatever the heck it was, 12 per pair. So that could give you some indigestion. So everything is, but and you had double the leverage in the spread. So I'm just saying is it was kind of poison, you know. But yeah, I did that. Hey Ned, thanks there. So that's our target. So this trade is done. Now, here's what you do with this. Let's assume, now I'm just telling you what I do, and I'm not saying it's the best of anything. I'm always looking to improve. So for me, don't forget, based on the number of runners I was operating this, I was done here. But when we went into this configuration, don't forget, and once we broke above here, this is the next target. It's just auction. So, but I was done here. Where's my next trade? Here to here, because that makes sense. Because this was an over under right here. This was the end of the long until we took it out. Then this, you see, is it logical? Can you see kind of how you can re engage? Are you guys tracking? So, this is the structured trades in the Trader Lab. You're all welcome to these. Everybody's like, oh, it's a big secret. No, there's no secret. You know where the secret is? The secret to the trading and becoming a career trader is a trade plan. And that's no secret, except nobody, everybody's in a hurry and nobody takes the time to actually do what it takes to be a career trader. It's like, really? I mean, if you're going to be a high performer, whether it's a sport or any, physician or anybody who has a practice that requires technical skill, I think you got to educate yourself one way or the other. And what most retail traders do is they do derivatives of the same process that doesn't work. In other words, indicators primarily. And then multiple time frames, and oh, let's do Fibonacci, like the market cares. It doesn't. And if you think I haven't done all of that, I've done it, and Elliott wave and Gann and mathematical processes and system design. I mean, I've done it, and I'm not saying others can't do it and be successful. I'm just telling you that I found that um, you kind of move to complexity to try to uh, derive certainty. Like there's a needle in the haystack or some magic tuning that you get the right mix of whatever it is. But the thing about a mix of things is if it's not exactly the same, I mean, exactly, you can't measure it because you've added a random component to it. If we always go back, I always go back to the basis of our business, which is if you want to use a gambling analogy, is Las Vegas, the house playing a game with statistical edge, executed exactly the same way. The only way they get their edge is by being exactly the same way. It's the only way they can anticipate it'll show up, and accepting the randomness of the interaction with the gamblers, because the gamblers walk out with cash. But the business of Las Vegas or of trading with that random component of interaction with the gamblers is that That randomness and how the cards are dealt and how the gamblers play it is all random. It's the same as us. But the house doesn't change the game. They just deal the cards because the games they play have a statistical edge. So they see these quote losses, not emotionally, but as a business and the cost of production. Write that down, and overhead. If you step away from how you feel, in quotes, write that down, how you feel, and you start embracing this as business, now you build a business. That's, in my opinion, the secret. It's no secret. It's just, and if you're in a hurry to trade and push the button, you're experiencing an emotional state and it's FOMO. The emotions are ultimately the things you must master. Having a vetted trade plan with statistics helps you master your fear. And we all have fear, or put it this way, uncertainty, because we don't know the cards. We don't know how the gamblers will play. We don't know if Bullard will say something. We don't know if somebody fat buttons something. And we don't know if the bomber comes in, who we've been seeing, and just disrupts our trade. It's still all in the mix, you see. So that's what we know. And the rest is random. If you were sitting understanding the behavior of the participants, that once we took this out, that this was next because you know the potential underlying and that's all you got, would you now pull out your plan for mean reversion, since you had a statistic up here, you had yesterday's high, we hadn't taken it out, and we rotated. You knew retail trader behavior would have their stops here. You knew if we came out to this edge, which we already pre-identified, that you, if you got a buying structure, this was your scale, for the same reason in fractal that this is our target. This is the same as that, except this is a fractal of that. Does this make sense and you guys following me? Guys, this is trading. What can I tell you? I don't know anything else. And I don't know where the market's going to go at this point. And you know what? It doesn't matter to me. Um, it to me, the job is, and it can go. I mean, look, the market can do anything. Where's the stops? Remember, we got shorts in the market not only from yesterday but the day before. They can get abused. Why not? Why should we leave them out? In fact, let's see. I think. Well, this is a higher time frame target, and it. But for me, I'm now. This is where you've got to ask yourself, what do you feel right now? Do you feel like you should still be long? How about your job is not to feel, your job is to do. Your job is to understand retail trader behavior, and your job is to look at your targets based on other behavior. And after that, whatever happens is random. It's always random. So, and I'm just talking about me. I'm not saying it's good, bad, or indifferent. I just trade the targets. I don't care about the rest of it because I know behavior. I don't know anything else. And it's all random. So for me, the trade's done. Put the car back in the garage. Here's, by the way, high volume here, outside edge. See, it's all the same. But do you have enough range? And do you have a reason to be long here? See, this made perfect sense to get the stops and get the target. This, clueless. Now, let's go back and look. Outside edge, outside edge. See? Now, I don't, for me, nothing to do. But you could observe this and study it. And this stream, by the way, if you're in the Bookmap Discord Trader Lab chat, you'll be able to review this stream over the weekend. I hope you get something out of it. You know, days are random in the sense of some days you kind of hit your head on the against the wall. You take your structured trades, you're taking stops, you're getting annoyed. That's emotional. It's like, what am I doing wrong? You know how you know what you're doing? Your plan. Your obligation is not to the randomness of the market. You can't predict it. I know we all want to say, I know it's going to do this. No, we don't know anything. I do know this was a pretty good bet. And remember, it's a bet that those stops, since we know they are there, and then we know about this, these are all good. Okay. After this, I don't know. Are we going here? I don't know. Now, subject to your plan, and this is not my plan, and I'm not saying I have a good plan. You could, let's look. I want to show you something. Now, this is weak structure. Here's your high volume. I know traders who will take this. I also know there's stops sitting here. So I have no trade. You see, this is the bomber, by the way. I think that's the bomber, isn't it? See, so I have nothing to do here. My car is in the garage. So I may be done for the day unless an opportunity is created that I can recognize that's aligned with my plan. If you feel the need to trade, that is, I'm going to suggest, and you don't have a vetted trade plan or a setup or structured trade for wherever we are at the moment, then I'm going to ask you what need is being fed? Peter. Just a point of question. If you make it up as you go, you're a gambler, you see. And if you don't have statistics, I think you're at a disadvantage. This to me, I have no idea what this is all about. And it's not my job. I do know I can trade it, but I'm really now like, it's just not, is it worth it? Here's the question for you. If you got long on this test, where's your volume? It's right here. How do you trade that? There, let's go back and look at this. So run, low volume, right? You've seen this before. We get our targets. Lovely. Thank you. Now what? So this is our target, right? There was our liquidity. Pull back here. But this is my volume. How can I get long here to here? So here's what I suggest in the Trader Lab. Uh, you narrate continually. If this, then that. If not, then what? If I have a low volume area, this, and I get buying here, this is a buying trigger in a microstructure, break high, and it pulls back, it's a potential long. Except the high volume is there. I have no range. I can't take the trade because I can't get risk neutral and I can't even, by the time I get in, I'm at my scale. Are you guys with me? But here's what I do with this. I continually read it because I'm practicing. If I'm sitting here, you see, if I'm sitting here, I'm going to still narrate it. If this, then that. If Don't forget now, this was my target, right? So I have no trade. But I'm going to still narrate the structure because this is where we took the long down here, remember? It's the same. But now I don't have a trade because I don't have a target. I don't know what it's going to do. So, and my obstacle's here. But my narrative is if this, then that, pull back. If I don't take it out, then what? Then up. To where? No idea. You see? That's why I have no trade. My narration is to kind of put on my brain that every time I see this, I'm beginning to get unconscious competence. And that's what my narration is about. But I have no trade. Is it logical why you see I put the Volkswagen back in the garage? Carrick is bookmap used by many. I'm going to say it's a high tier order flow tool. It adds another level of insight into participant behavior because we can see the buy stops coming out. We can see exhaustion right here. By the way, this is exhaustion. 139 stops coming out. Thanks for playing. 7, 8. Where's the buying? Exhaustion. No way to know, by the way. So where's our stops? Under here. So there's nothing here for me to do. The thing with this, and by the way, that is exhaustion. And now you see the seller. You see? 75 stops came out on this move down. 17. Now where's the stops? Here and here. It's the same behavior as the long we had down here. Yes, to answer your question, do a lot of people use Bookmap? I'm going to say it's an advanced tool, but if you see yourself as a competitor, you need the best tools and the best skill sets. I mean, think about it. It doesn't matter if you're playing in the NFL or the NBA. Who do they put out? You're a competitor. What do competitors do? They watch tapes, they do replays, they study their performance, they get coaching, and they continually practice. You know, Michael Jordan, and I don't, I'm not a, don't, I'm not a comparison to him, but I'm saying is high level performance requires intentional practice. And what I'm doing here in the stream is I'm sharing structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. And there's a library of webinars that show and demonstrate the behavior of the participants. Ultimately, the market is made up of participant behavior, and it's not indicator driven. Indicators were relayed on the participant behavior to try to interpret what's happened by looking in the rearview mirror. For me, that's not close enough. I can see this right here. Well, when I have a triggering structure like we had wherever it was down here, I want to see it right now, right here. I can activate. I mean, this isn't a trade. I can activate here. My indicator's not going to do that for me. And then I know, but this is not a structure I operated. But because I've already gotten my target. Remember, the target for the long was stops above here, yesterday's high, and this. Then the trade's done. Now, whatever happens here, I don't know. It's not my trade. It just doesn't matter. The thing about having so yes, Bookmap, yeah, I started using Bookmap in 2015, and it helped me because in other words, my process that I use here, I've been doing this for a long time. What, in fact, in the mid 1980s somewhere, Peter Stottlemyre, who created Market Profile, he actually taught me Market Profile. And I will tell you that I couldn't do anything with it. And um, I mean, it was interesting. It made a lot of sense to me, and I just didn't understand it. At least I couldn't interpret it. And I'll tell you why. I was using indicators with it because I thought I'd make it better. And all I did was create conflict and ambiguity and inconsistency. In other words, I actually sabotaged myself. And I didn't understand the problem at first. So, when you start looking at something, you start thinking, why? Why? And then I would adjust my indicator or do this and that. What was I doing? I was doing the thing that prevents traders, in my opinion, from becoming successful because I was adjusting and curve fitting a process. And I also was using multiple time frames, which I still do to a certain extent. But I wasn't thinking in fractal. I was just thinking kind of like, well, this is, how a profile might behave according to the literature, and then I'd get smart. Well, all I did was set myself back. Ultimately, and it was not easy to do because I built trading systems, so I was very much quote indicator or derivative indicator oriented, and I shared that office with George Lane, who created stochastics. You might say I was pretty sold on oscillators and indicators. I mean, I was creating my own hybrids, so to leave all that behind was very difficult. I didn't understand that I was actually sabotaging myself. Now I use no indicators, but Bookmap, what it did for me is it helped me see inside so I can get more closer to the participant behavior. So I can open this up as much as I want to see inside. I could not do that previously. You know, doesn't matter. And I didn't have the ability to see stops to know who the buyer was. Who, what is this a market? I mean, yeah, stop becomes a market order, but is this person really getting long or is this just buyer exhaustion? You see that, and here's icebergs. They're taking the other side. So what does that tell us? Do I want to be long here? No, I want to be out. Are you guys tracking? Oh, Nanny, I'm glad you had a good day yesterday and today. That's the purpose of the Trader Lab, is to try to help retail traders differentiate their results. And part of the differentiation is understanding that this is a business. And how do you get it? How do you do it? You take one, I mean, it's a suggestion and it's up to everybody. If you're not satisfied with the results you're getting doing a process that you're doing, you might be doing derivatives of a process that's actually defective in the sense it has a negative expectancy. If it's inconsistent, you do not have the ability to measure it in its specific components or setups, if you want to call them that, because you're inconsistent. What I suggest is you kind of tear it down to its basic elements, trading, which is really what's it built on. It's the participants trying to find what's too high, what's too low, what's fair. Was this too high? Yeah, it is. We'll see you later. Thank you. See, that's it. And then you pick out, if you come to Trader Lab, there's 60 PDFs of structured trades you can download, and then you pick one out. The idea of the Trader Lab is to help you build out a trading plan, and it's really a template. With one setup or structured trade, you can build it, and then you'll understand how the business works. Also, once you build it out, think about the discipline you have to muster to be able to wait for that one vetted trade that gives you a statistical edge. Our need, our emotional stimulus is to chase and make it up and all this other stuff. That is the other element here. Um, Las Vegas doesn't make the games up, they just play their game. And now they have multiple games. Well, for us, it would be multiple setups or multiple trades or multiple contexts and how we operate in each one. You build it one piece at a time. That's what the Trader Lab is built on. It may not be exciting, it may take some time, but you have a choice to make in what you do. You can choose to change something if it doesn't work. If you are waking up with Trader Groundhog Day, you might be doing derivatives of the same process. Outside edge, inside yesterday's range. Me, car and garage. Now, if you can scalp and do rotational trading, a separate plan. I don't think it's a good one, but some traders I know do it. They'll be short here, they'll be looking to cover here, they'll be doing all kinds of stuff. It's not that you can't do it, but if you have the compulsion for action, that is not the business of trading. I think if you want action, buy a lottery ticket, it costs less. And you may find that if you start documenting your interactions that are not in alignment with the higher time frame and understanding of market mechanics, that you don't have an edge. If you knew you didn't have an edge in something, whatever, some setup that you do now, if you could actually measure it, which you might not be able to if it's inconsistent, but if you could measure it, would you keep doing it if you knew it was a guaranteed loser over a large sample size? I'd suspect you wouldn't. Well, that's the whole purpose of the business side of trading. Where's your edge? Stay out of when you don't have an edge. When you have an edge, accept that it's random. Whatever happens, happens. And either the trade will work or somebody will bomb the trade, or it's just one of those trades that doesn't work. Your job, your accountability piece is to your trade plan. That's why, for me, there's nothing to do here. Now, I will suggest there might be something to do if you had a plan for it. Does anybody Can anybody imagine what it might be? What it might be if you had a plan for this based on what you see right now? Wild, just a wild question. Give you the last question before we fold up because my time is up. If this, then that. If not, then what? If this is too high and we get a selling structure, then what? Then south to the next high volume. Fall out of here, next high volume. This is a potential short counter trend, depending how you define it. Why is this important? It's too high. Can you see the symmetry and how you might narrate it? What does it mean? So if you don't fade, and here's why it's a potential short, too high. See? Now you don't know. I don't know. And who's everybody's long? Where's their stops? Well, you see, where's the next place for a test? Here. So too high in this, too high in the previous daily time frame, potential short. Where to? Here. How about that? Potential bounce into here, potential down to here. Not a recommendation. You could see this is more advanced in the sense of while the process is generic. Now, here's the other piece here. So, too high. And again, who knows? Right? I don't know. Where's the high? Not my skill set. Exhaustion, break low, pull back to the microstructure. Not my trade, but right there is a short trigger. Not saying break out. Now your high volume is here. If it pulls back here, there's a potential for continuation down. Or this is too low and we come back here. That's it. Hope it makes sense. If you're interested in this, come visit the Bookmap Discord Trader Lab chat. Download the 60 PDFs of structured trades and minutia that you might find interesting reading over the weekend. Also, if you're in the Bookmap Discord Trader Lab chat, these streams, daily streams, are available for your review, and there's a library of webinars in there, and also additional free trader education, stocks, options, futures, market maker behavior, crypto, algorithmic behavior, and of course, order flow with a high tier tool like Bookmap. Algorithmic behavior, HFTs, stops, icebergs, liquidity, order flow. There's a lot here, and you can all take advantage of it. You don't have to be a Bookmap subscriber. You won't be solicited. And it's a great community of like-minded traders looking to leverage their collective experience. So let's see the behavior here. Too low, see? Now where's too high? Now it can do anything. So let's watch here. Thanks for visiting the Trader Lab. If you're in YouTube, please give a thumb up. Subscribe to the channel so you get notifications of other streaming. I appreciate you guys. Have a great weekend. Remember, the market is closed tomorrow. Essentially, we have NFP. But, say la guerre. I will not be here Monday. I wish you all a great holiday. If you're visiting with family or whatever, however you might observe it, too high, not a recommendation. Volume, too high. Potential short, not a recommendation. So support, potential resistance. Outside edge, remember? Outside edge. Where is it? Good luck with that. But this is the area. Then if you were going to fade it, and it's not a recommendation, you'd be looking out here into the volume and see the behavior. Then if you have a triggering structure, it sets up a potential short, not a recommendation. You just have to slice and dice it. And here's the better part of this. This is why. You see, it's not in a vacuum. Can you say why? That's the Trader Lab. Thanks again, guys. Thanks for visiting the Trader Lab. Thumb up on the way out in YouTube. Appreciate your time and your interest. Visit the Trader Lab at Bookmap Discord Trader Lab chat. Tom B. There's a link at the bottom of YouTube if you're interested in visiting. You don't have to be a subscriber to Bookmap now, ever and ever, and you won't be solicited. But I think there's a lot of value. I wish there was something like Bookmap education available when I started trading, since there was nothing. So thanks again, guys. Appreciate you. See you soon. And remember, this stream is available for Discord Trader Lab chat participants exclusively over the weekend. Thumb up on the way out in YouTube, please.